CarMax's stock crashed by 20% in just one day. Their stock price just hit the lowest that it's been since March of 2020. So what happened? Well, they just released their earnings and they were an absolute disaster. And this is sending major warning signs to the car market and the entire US economy. All right, so let's talk about what happened. Well, CarMax was actually expecting to increase their sales for the quarter, and what happened was actually the inverse. They ended up declining their sales by over 6%. That is huge. And what's very interesting about this is their average retail price actually went down. And here's the thing, when I'm here at my car lot and I lower my prices, when my prices go down on my lot, my average transaction price goes down on my lot, then my sales go up. And it's because the lower your prices are here in the car market, the more vehicles you're going to sell. The car market is so bad that even though CarMax's average price went down, they still lost sales. And the CEO actually had a few comments to say about this quarter, and what he said was, for the quarter, each month was down year over year, and each month got a little weaker throughout the quarter. And he also labeled this quarter as challenging, and some things that he pulled up when he was talking about why we had this kind of quarter come out of CarMax was that there was a big pull forward in demand earlier in the year. And if you've been subscribed to this channel, you knew that this was happening. We've seen this even at my small used car lot, where there was a big pull forward in demand earlier on this year because people were trying to get ahead of tariffs. Even though all these tariffs were only going to be affecting the new cars, a lot of people thought that this was going to send used cars to the moon too. So used car dealers, just like CarMax, also got a very big bump early in the year. And here's what happens. Well, all those consumers that were thinking about being consumers throughout the summer, well, they had already bought their vehicles. So all of those buyers that were in the market, they got taken out of the market. And now we're seeing all the cracks from the car market, and not just this quarter, but all the consumers that were going to be buyers in the next couple quarters, they're now gone. There's going to be a very tough road ahead for the car market. So now, what did investors do? Well, in one day, CarMax's stock plunged by 20%. It was down to $44.49, and it's on track to be the biggest losing day since September of 2022. But here's the thing. Year to date, CarMax's stock has lost 47% of its value. It's lost half of its market cap. That's absolutely insane for that to happen over the course of 1 year. And then if we go back even farther, the stock hasn't been this low since March of 2020. And we all know what was going on then, and that fear was at its height. It was the worst time to be a company that was actually trading on the stock market in March of 2020 because everyone thought everything was going to zero. It's that bad right now in the car market, and you can see it from what these investors are doing with CarMax's stock. And here's the thing. CarMax is the largest used car dealer in the US. So as CarMax goes, so should the rest of the car market. And I think we can also pull a lot of signals from a company like CarMax to see how the overall US economy is going. And here's the thing. People need cars to get their kids to school, to go to work, to actually make money. And if people are pulling back on spending money on cars, well, then that's a massive sign that the economy is very, very weak right now. And specifically in the car market, with prices going so high right now, and we're going to have prices come in. We're going to have people not buy vehicles right now, and that's what we're seeing, and it's going to happen through the whole car market. And in this past quarter, CarMax's average transaction price actually went down, and I can give you the numbers right here. So it was at $26,245. This is the average per all their vehicles that they're selling in the retail space, and it dropped to $25,993. That's only a drop of 1%, but this still should increase some of their sales, but no, it didn't do that. It made the sales go down. And what I want to lean on right here is that $25,000, it's actually right at $26,000 for an average transaction price. That's way too high. And what you always say in the car market is that there's always a price that someone will pay for a vehicle. So if you haven't sold that car yet, well, it's because the price is just too high. And CarMax is going to have to figure this out the hard way, that they're going to have to continuously lower these prices until they actually can get butts and seats, get metal moved. And here's the thing. They've been buying cars all along this time. So So they're going to have to be decreasing prices, even though they paid some elevated prices back a few months ago so they could get their lots back filled from all this pull forward in demand from the tariff fear buying that we've experienced in this car market. The problem is, as the prices continue to go lower, they're going to be eating a lot of this margin that they thought they're going to make from buying these cars when the market was all hyped up. And they're absolutely going to have to lower their prices because they can't go through another quarter like this where they have 6, 7, 10% down in actual sales volume. Their stock is not going to be able to survive that. Investors are not going to be able to stomach holding their stock when growth is actually going downhill. So that means CarMax is going to have to lower their freaking prices if they want to actually sell some cars. I'm a small used car dealer right here. When we go through moments of slow times like we have over the last few months, what we do is we get more aggressive on our pricing. If we want to actually move metal, I've got to lower my prices. Sometimes it looks like, okay, I have a $3,000 car out here. If it's not moving, I have to lower it down to 25. Doesn't move, I got to lower it down to $2,000. That's a big percentage of what I have to take off of what I'm actually going to make on these cars. But if I want to move cars, I have to stay ahead of the market. The only way that I can stay ahead of the market is by shifting my prices and shifting them quickly. I have the luxury of being a small used car dealer. I'm the one that pulls the trigger. I'm the one that makes the decision. If I need this car right here, that's $5,500. If I need to go to $4,500 tomorrow, I can do that. CarMax cannot be that nimble. They are a massive corporation. So they're going to have to try to stay ahead of the market months and months and months ahead of it. Right now, they're behind. Sales going down. They have to do something. They have to do something right now because it's going to take them time to actually figure out where that sweet spot is of what consumers will actually pay for these cars. And if you've been subscribed to this channel, then you could have seen this going on in the car market just for me showing you what I have to do here at my car lot. I have cars out here right now that are $2,500 that have been sitting for weeks and weeks and weeks. And 6 months ago, those cars would have been sales here on my car lot, and a lot of these vehicles are sitting for a lot longer than what we experienced 6 months ago. And just like my market, CarMax's market is actually not that much different than mine. The consumers that go to CarMax are going to be more subprime consumers. Now here, I don't finance any of these vehicles. They pay cash for the cars. But just similarly to what CarMax can sell is about right at the down payment that people are paying for a full car here at my lot. They're just willing to buy a more expensive car. They're willing to take on debt for that car. So in a lot of ways, my market is very similar to what CarMax's market is. And I can tell you that my market, very, very weak right now. And what we can see from CarMax, the market very, very weak right now. And a lot of these consumers are what drive a lot of profitability in a lot of these big companies. They're the ones that are going to spend a lot of money. They're the ones that are going to make foolish purchases. And in a lot of cases, CarMax, when car prices are way too expensive, foolish people are the ones that sign up for a lot of these loans. But now they just can't do it anymore. And now CarMax is having a hard time selling cars. The writing's on the wall. Car market is getting worse. And in my mind, I would assume the economy is going to follow suit. And usually when I'm doing these videos, reporting on earnings from CarMax, I go to CarMax and we usually put it out maybe a couple weeks after they actually report. But I felt like this information was so big that we needed to do it a little bit quicker. And what I can tell you is that CarMax is one of the first that have reported on this quarter. And I would assume that you have Ford, you have GM, you have Stellantis that's going to be reporting later. You have Carvana. This quarter is probably going to be very weak for a lot of them. In my opinion, that's what I think is probably going to happen. Now, look at companies like Ford. What did they do? Well, last quarter, they actually reported record sales. But when Ford makes a sale, it's not to you or me. It's not an average consumer. Their sale is a wholesale sale to their actual dealer body. So right before all these deliveries happen, what happened in the market? Well, just like what CarMax was telling you is that, okay, a lot of pull forward in demand from people fear buying because of tariffs, you know what I'm saying? So you have a lot of these dealerships that sold a lot of these F-150s, a lot of trucks. They moved a lot of vehicles off of their lots. And now Ford loaded them back up. And then even more so, they were able to channel stuff a lot in this last quarter. So what I am expecting is the future quarters to be very, very, very weak, because all this channel stuffing that occurred, sending all these vehicles to the dealerships more than they even needed so they could report a lot of these sales. Well, what's going to end up happening is that a lot of these dealerships now, they're going to have to start turning down a lot of these allocations. And when that happens, that's when Ford, Stellantis, GM, that's when a lot of these automakers, their sales are going to start tanking. We're going to see a lot of quarters just like what we saw out of CARMAX, and it's going to be the foreseeable future, because once all these dealerships got loaded back up, once CARMAX got loaded back up, everything that they have sitting on their lot right now is going to sit for longer, because things are tougher right now in the economy, and there's no fear-induced buying happening right now. Nothing positive going on in the car market, and it's going to be nothing positive for probably at least the next 6 months, maybe the next year, maybe the next couple years. Just have to wait and see. Make sure you're subscribed, and I'll give you all this information as it comes out.